From 1996 to 2000, the Nasdaq was on a heater, rising from $400 to $4,400 a share. And then the dot-com bubble burst, wiping out over $5 trillion of wealth overnight. And today, I'm going to show you why the environment we're in right now looks exactly like 1996, and why Jerome Powell's comments and decisions on Wednesday of next week could kick off the next bull run in Bitcoin and equities that you're not going to want to miss. We've seen a bunch of $1 million Bitcoin predictions by 2030, and I'm here to show you today why those numbers aren't as crazy as you think. And I'm actually going to back it up with data and research. This is why people subscribe to this show. We go deeper than surface layer. This is Dante Cook with Bitcoin Simply. Let's go.
The rough idea I have in my head is like we'll see $1 million Bitcoin by 2030.
We have a 2030 target. In our base case, it's around $650,000. In our bull case, it's between $1 and $1.5 million.
Okay, these $1 million Bitcoin predictions by 2030 seem ridiculous. When you look at the history of bubbles and you look at where we are today with AI, you understand that we're about to enter into the mania phase. The smart money has already been invested in AI, data centers, energy, commodities, crypto. But the media will begin to call them mission critical. And then everyone else is going to pile in, thinking this is their last chance to get in on these investments. And what happens? Well, the prices go to the moon. This looks exactly where we were in 1996. Unemployment rates were hovering around the 6.5% range. And what happened was the Fed started cutting rates from 6% to about 4.25% over the coming year and a half. And this kicked off the bull run from the Nasdaq going from 4,000 to 4,400. The headlines in 1996 read almost exactly like what they do today. Low to no job growth, labor tightness, sticky inflation that the Fed was fighting, low wage growth, employers not hiring, and a lack of competitiveness from the United States in key industries like telecom. Alan Greenspan had a monetary tightening policy in 93-94 to fight inflation. And after that, here's the comments that he made to justify the rate cuts. As a result of monetary tightening initiated in early 1994, inflationary pressures have receded enough to accommodate a modest adjustment in monetary conditions. Mark my words, you're going to hear comments like these from Jerome Powell, if not on Wednesday, in the next meeting in October. And what also happened at the same time was the unleashing of American and global innovation in the telecoms industry. This happened in 1996 with the Telecommunications Act. Bill Clinton sought to unleash the internet and American innovation in this key industry and famously signed this document with an electronic pen. Sounds like the same things we've been hearing from the Trump administration about AI dominance, crypto dominance, energy dominance. So how does this relate to today? Well, Jerome Powell is under the same pressure and implementing the same playbook that Alan Greenspan did in the mid-90s. And what's also interesting is that if he cuts rates with the S&P 500 at all-time highs, well, that'll be just the third time that this has happened since 1996, the first time it happened. And right now, we're seeing the same playbook unleashed with crypto, AI, and energy that we saw with the Telecommunications Act in 1996. Listen to Cynthia Lummis talking about the crypto innovation that will be signed into law by December at the latest.
Well, we're finally embracing President Trump's goal of having the United States remaining the digital asset capital of the world. We shouldn't be ceding that role to the United Arab Emirates or to Singapore. Even Japan, which is notoriously cautious, has a more robust digital asset regulatory framework than we do because they're starting to embrace innovation. And it's very important the United States retain that role. We did stablecoins first. The Genius Act passed. It's now law. And that provided the momentum we needed to do market structure. So the House passed a market structure bill. It's called the Clarity Act. Right. We in the Senate are going to mark up in the Senate Banking Committee a market structure bill in September. The Ag Committee will do theirs in October because they've got the commodities jurisdiction. The Senate Banking Committee has the securities jurisdiction. Then we'll fold them together with clarity and hopefully get this across the finish line by Thanksgiving or at the latest Christmas.
This is going to lead to the same run-up that we saw in the dot-com era. Now, if you go back and you listen to the full clip of Brian Armstrong when he made his $1 million Bitcoin prediction, well, are you starting to see how these things are lining up with how the world looked and felt in 1996?
The rough idea I have in my head is like we'll see $1 million Bitcoin by 2030. And there's high error bars around these things. But, just to give you a couple of data points, right? It's like we're starting to see regulatory clarity emerge in the United States, which I think is a bellwether for the rest of the G20. have the Genius Act passed now for stablecoins, but this market structure bill is being debated in the Senate. Fingers crossed something could happen by the end of this year. That would be a huge milestone. The United States government now has a strategic Bitcoin reserve. So that is, if you'd asked me 5 years ago, that would have been kind of like vision board. Someone would have said, you're crazy, like the United States government's not going to officially hold Bitcoin. But if they do that, which there's now an executive order to do, I think a bunch of other countries are going to do that. We've seen a lot of interest from sovereigns, right? I think Coinbase actually provides crypto services to about 140 government entities, believe it or not, like at both federal, state, local, and internationally. So governments are now getting more and more engaged in this. And you can imagine the big pools of capital around the world. And there's a lot of, so I don't see the regulatory thing going away. That was one of the big risks is the government going to shut this down? I think that risk has been severely diminished. And then, is there going to be some flaw found in the Bitcoin protocol? I think that's been severely combed over at this point. We need to make sure we upgrade it to a post-quantum cryptography. But
Are elliptic curves already post-quantum or no?
They are theoretically, I believe. I don't. No one
really good to nail that
down. It's a little untested, but I believe there is a path where the Bitcoin core team and Ethereum and Solana, everyone, they're looking at proposals now to upgrade to even
definitely post-quantum.
Yes. So I think the list of kind of risks is getting diminished, and at the same time, the amount of demand, like the amount of institutional money just sitting on the sidelines waiting for this next bill to land, these are the big institutions I talk to, they're holding 1% of the portfolio in Bitcoin, and I'm like, what would it be to 5 to 10? And they say, regulatory clarity, that's it. So I think we'll continue to see huge inflows of capital. The ETFs have been huge.
If Bitcoin goes to $1 million, well, do you want to sell it? Probably not. You probably do want to borrow against the value that's been created since you bought Bitcoin. And you can do that by working with a provider like Ledn, the leader in Bitcoin-backed loans that allow you to unlock liquidity in your Bitcoin without selling your Bitcoin. Ledn allows you to borrow up to 15% loan to value of your Bitcoin holdings. So if you want a $4,000 fiat loan, well, you post $8,000 in Bitcoin collateral. The process takes just 6 hours from when you fill out an application, which takes just 2 minutes, to the fiat hitting your account. There's no credit checks, and they've done this thousands of times. Matter of fact, they've issued over $9 billion worth of loans. You can trust in the process and you can trust in the team. Go to learn.ledn.io/simply to get started. One of the things you're not going to want to do if Bitcoin hits $1 million a coin, like Brian Armstrong predicts by 2030, is to actually understand how to custody your Bitcoin, how to hold it safely, securely, privately, and confidently. You could do that by getting a coach, just like you would a coach in any other endeavor in your life, a financial advisor or other people who know best practice. Well, that's what the team at the Bitcoin Way does. They help you with the best practices and taking full custody and control of your Bitcoin. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. The implications of what happens when Bitcoin hits $1 million are pretty staggering. And I don't think people understand the implications of $1 million Bitcoin, $10 million Bitcoin. They're not going to understand the debasement that's happening in the underlying currency, the dollar. And when you look back to 1995, 1996, there's no way that you could have predicted a company like Amazon would be worth trillions of dollars. And that's not just Amazon, that's Google, that's Meta, that's Apple, and plenty of other companies that are approaching the $1 trillion mark. The number trillion would have been unfathomable at that time. And the number $10 million Bitcoin, well, that'll be unfathomable as well.
People who look at this and are saying, oh, well, once it gets to $1 million, I'm going to sell and I'm going to take some massive, returns. They don't. What they're really saying is they have no clue what's actually playing out here. Because if this goes to $1 million, it's going to 10 million, it's going to 100 million, it's going to look like a Zimbabwe note of 100 trillion units. And that's what I think. If you think it's just going to go up to 500,000 and then it's going to kind of stop there, and that's kind of like where it ends, and like that's the end of Bitcoin. It's now, stabilized at 500,000. You really do not understand like what's playing out here. And I think the higher that you go like that, the more aggressive the bid is actually going to get, and kind of get away from legacy policymakers and people controlling currencies, fiat currencies as we know them. Now, when does that happen? I don't know when that happens. I don't know if it's this cycle, next cycle, or whatever. I don't know. But people that are suggesting that Bitcoin is going to have smaller and smaller returns into the future, I think are getting duped a little bit as to like what kind of plays out in the middle of that S curve.
We will hit dollar sat parity, and it's going to happen suddenly, not gradually.
As Bitcoin becomes the new world reserve asset, the price will go up. It'll go to 1 million, it'll go to 10, and then it'll reach dollar sat parity. And probably before that happens, we hit a terminus point where, you stop pricing things in dollars because it doesn't make sense anymore. And there's tons of historical examples of this, right? Like fast failure of fiat currencies is the norm. It's not the exception. Look at the German mark, right? That's fast fail. Every fiat currency fast fails. It doesn't fail over 50 to 100 years. Except for maybe the dollar. It's failed over 100 years, but it's coming to a close. But as it increases in value, then of course you see less volatility because it takes more to make a dent. If you go back to, I think last year, right, the Saxony government in Germany, they dumped 50,000. And that made a bigger impact than the 80,000. So you can already see in a very short time frame a far more muted effect of coins being dropped.
And the reality is when this happens, the people that don't own assets are not going to be able to participate in this. And the gap between the rich and the poor is going to grow wider and wider. The bottom 50% of households now just own 2.5% of wealth in the United States. History says that rate cuts are going to lead to new all-time highs in assets, just like they did in 1996. And that's going to separate the gap between the people who own things and the people who don't. This won't just be with houses, as the major wealth and equity built moving forward will be in stocks, will be in digital assets and commodities.
But by bidding up home prices to very expensive levels, it makes, it's good for those that have a home, and it's good for those who've been able to lock in a short, like a long duration fixed rate mortgage against it. But it's very bad for those who are trying to enter the home buying market for the first time. This is also generally something you see in countries like Australia or Canada, where they have a policy of kind of trying to keep prices elevated, just because so much of the country kind of has their wealth in real estate. But then the losers that are those that are trying to buy a house not for investment purposes, but for the actual utility purposes of using it.
So the moral of the story is be an asset owner, own Bitcoin. The mania phase hasn't even begun yet. And now hopefully you have some historical context to understand why Bitcoin will run from where it is today to numbers like $1 million Bitcoin in 2030, just like stocks ran from what they did in 1996 to 2000. One of the ways you can continue to level up on your Bitcoin journey is by meeting Bitcoiners in real life. And there's a great way to do that with over 3,000 people that will likely be at the Mining Disrupt conference in Dallas, Texas from November 11th through November 13th. Use the promo code SimplyBitcoin to get 20% off your tickets so that we can meet you down there. Hope you get value from these shows as always. This is Dante Cook with Bitcoin Simply. Happy stacking.